To remain updated with the latest business news, click on the bell icon.
Why is there only 5,000 crore rupees provided for the vaccination program for next year?
Sure. The vaccination program is nearing its initial target of full vaccination of 2 doses of the entire adult population. So that is nearing completion. We are now, I think, at 95% for the first dose and above 60% for the second dose. And the funding for that first phase is almost completely accommodated within this year's revised estimates of 39,000 crores. So what is the first phase is fully funded in this year's numbers. What happens beyond that is we have now, of course, the government has opened up vaccination for the third dose to the above 60 and to the frontline workers, and for the initial vaccination to the 15 to 18.
Yes.
The costs of these two are factored into our estimation for next year. Now, what happens beyond that is something that I, as a finance person, don't have visibility on. It is a matter of how the pandemic evolves, what the health policy is, and the funding will follow the policy. So, we are funded for what is currently required.
And obviously,
and last year too, we've increased it.
Absolutely.
So it will follow the need. I mean, as the need arises,
you could always take a supplementary allocation for it. But my next question leading from this is, if this is the sort of financial allocation, what is your own assessment and the government's assessment with respect to the COVID impact on the economy? Are we out of the woods? Can we say that FY23 will be the year of growth with the pandemic more or less behind us?
I can tell you my hopes and then I'll separately tell you my expectation. My hope is that it is behind us. That's a hope. But as a serious, planner of finances, one has to also take cognizance of a pessimistic scenario. But even in a pessimistic scenario, and even if there were recurrence of waves of COVID during the year, I think two things have changed. One is the level of vaccination in the adult population is becoming very high. I mean, at 2 doses, 60 plus. And soon it will be 90 plus with 2 doses. And regardless of whether it's a new variant, old variant, vaccination is clearly showing up as a preventer of serious illness.
Absolutely.
So that's one positive. The second positive is I think governments and civil society, private sector are learning to cope with COVID. So behavior. So instead of we started with a complete lockdown in the first phase. Then we had more moderate lockdowns in the second wave. And in the third wave, we have found that much less of restrictions are being imposed. So I think from the economic point of view, more than COVID, it's the physical response to COVID in terms of closure of schools, closure of cinemas, closure of restaurants, closure of services, closure of markets. This is what has an economic impact. So my sense is even if we were to assume that there would be some recurrence, I think the economic impacts will be much smaller than the earlier waves of COVID.
Dr. Somanathan, is that the reason that the tap, so to say, has nearly been shut when it comes to the additional expenditures that were allocated for the COVID response?
The next year's budget, that is for 22-23, does not provide for any major COVID-related relief expenditure. Yes, that is true. But in the last 2 years, we have demonstrated that if such contingencies arise, we can respond quickly. And so that, of course, remains at the back. But
point fully taken. Yeah. But a lot of post-budget commentary is saying this is an absolutely valid argument. But what about the loss of consumption and the lingering effects of job losses and income losses? People are saying that your budget is not providing for a consumption boost.
Consumption boosts can come directly through infusion of cash to some people, or they may not come. Now, the experience in the West with direct cash transfers is a lot of it was saved. So it's not as if a direct cash transfer results in consumption. Even in India, in the first wave of COVID, we made a massive cash transfer to the Jan Dhan accounts over a period of 3 months. There was a study soon after that which showed that 40% was saved. So it's not as if making a cash transfer it could result in saving as much as in consumption.
Is the government making an ideological choice after giving money? It's someone's money to spend. Why would the government want to know whether you spent it or saved it?
But you were talking about consumption. I wasn't talking, you spoke about consumption. So I'm asking you, I'm telling you that there is no guarantee that cash infusions result in consumption. They result in income. But whether that income is spent or not is what matters for the economy. On the other hand...
May I interrupt you to say
sure.
that some economists would say that you're trying to evolve a new macro framework because cash in the hands of people is supposed to be a booster in times of slowdown and recessions.
I'm not evolving a new economics. John Maynard Keynes spoke about marginal propensity to save. And if there's a marginal propensity to save is high, then the multiplier effect of cash transfers is low.
Does our economy need spending or saving at this stage?
It needs spending, and that's why we are spending through capital expenditure.
But only the government is doing it. Why not the private sector?
The private sector will have to begin spending when they see the investment opportunities, which is what we are trying to kickstart with our public expenditure.
Dr. Somanathan, and I say this on record, that this government has made numerous attempts to support private investment. Most of those have had results, including the banking thing. I will not go into the details. Why, in your assessment, is private investment not happening to the level that you would yourself have perhaps expected?
There were a few years when we had what is called the twin balance sheet problem, where the banks' balance sheets were bad, the corporate balance sheets were bad. So obviously investment was not happening because banks couldn't lend, corporations couldn't borrow. So that was one phase. As we began to get out of that phase in 1920, we were hit with 2 continuous years of the pandemic. Now, the pandemic and its physical restrictions, I repeat, the biggest influence of the pandemic on the economy, apart from actual lockdowns, is the restrictions on a number of forms of consumer demand. So, demand stimulation, in my view, will come more from the removal of restrictions. If we can go to a cinema, then you can buy some popcorn, which means there's a popcorn supplier who starts supplying it, who engages workers to supply it, who begins to purchase corn to provide the popcorn. Now, if that is closed, that is closed. You can't inject cash and expect that industry to revive. So, removal of restrictions is the prime requirement for demand to restart. Now, if demand restarts now, when balance sheets are in much better shape, banks are in a better position to lend, the capital markets have funds to lend because of lots of funds coming in, we are likely to see a revival of private demand. And
by when, sir?
It's hopefully by the end of this year.
If you like the video, do like, comment, share and subscribe.